What is your take from being here in China on the brewing trade friction, if you will? Some are saying it's already getting into a bit of a war. What's your perspective on it?
Well, first, Steve, I just want to thank you for being here. Thank you for having me. It's good to be back in China, and it's nice to spend some time with you this morning. Look, the relationship between China and the United States is a hugely important economic relationship. There's no question that the level of friction around the trade discussion has been escalating, and in the context of that, that's leading to some uncertainty and some question about where this will all go. Obviously hard to predict at this point. Market participants are watching it very, very closely, but to the degree that it escalated more significantly, it would be bad for both China and the United States. So my hope would be that the rhetoric gets put aside, and over time here, there's a constructive solution that's worked through. But I'm watching this as you are, and we'll have to wait to see how it all plays out.
What are you getting from your Chinese clients when you come here and meet with them? I'm sure it's at the top of their list of concerns.
Well, certainly, everybody's talking about it, and the implications if this escalated to an all-out trade war, there'd be implications on market activity, there'd be implications on investment, there'd be implications both here in China and for U.S. clients. So people are watching it, people are interested in seeing how this unfolds. And everyone's hopeful, because this relationship is so important, that there'll be a constructive solution and we all move forward.
We heard from Lloyd Blankfein just yesterday saying that this was more a negotiating tactic, perhaps, from the White House, and that they're not both sides are not going to be conducting mutual suicides here. Would you agree with that?
It's certainly in the interest of both parties to find a constructive solution. So I think Lloyd's referring to the fact that if people do what's economically in their medium and long run interests, we should get a solution over some period of time.
How concerned are you that this could spill over into areas such as financial services? We know about the Big Bang reforms that the Chinese government has announced about allowing foreign banks to have full ownership of their joint ventures, which are currently joint ventures. You do have a 33% stake with Gaohua. You would like, I would assume, to get up to 51, which is allowed now, and then perhaps in about 3 years up to 100%. Do you think there's a potential for this happening?
Look, we're encouraged by the messages that leadership here has conveyed around continuing to open up and liberalize markets. We're moving forward on the basis that that's something that we will accomplish over time, and are very, very focused on it. And so we continue to work and invest in our business here. We see the opportunities, for us here in China to be quite significant. We announced a hire today, a significant hire, a partner hire in our investment banking business here in China. So we continue to invest in the business to grow our business. We've been here for a while. We're going to be here for a long time. Mm-hmm. And so if you put things in a broader perspective, we're confident that this will all move forward appropriately.
Veteran banker Wei Cai, I believe you're referring to, who's going to be your new co-China head of the investment banking.
Co-head of our China business here in Beijing.
What does that what signal does that send as far as the amount of capital and amount of emphasis you're going to have in the investment banking going forward, if indeed, as well, on the securities joint venture, you do get wholly owned control of that, and how much you're going to allocate with capital?
Well, I think the important thing to note is that we've been investing here for a long time with a joint venture structure where we've owned 33% of our business. We continue to invest today. We're encouraged by the fact that we're moving toward a 51% ownership, and are hopeful over a period of time that we'll own 100% of our business here. But that process will move forward. It's not stopping us, though, from investing and putting us in a position to serve our clients and continue to provide the services that are so important to them.
What signals are you getting, though? Or are you getting any signals from the government that perhaps they might delay applications or reviews of applications? Because, the state media, People's Daily, did have an op-ed in April saying nations that, violate WTO rules or engage in trade wars will not benefit from the liberalization policies that they're enacting.
Yeah, I'm not good at speculating at what would happen if there was an all-out trade war. We're moving forward on the basis that it's constructive for us to continue to invest in our business. We're moving forward with our application process and are looking to get our application filed as quickly as we can. And so we continue to invest in our business here and optimistic about the prospects we have.
Mm-hmm. What's your view on the U.S. economy right now? I mean, there are concerns that maybe the Fed is tightening too fast as the yield curve is flattening a bit. Are you concerned that this, if it does turn into a trade war, it could also limit growth in the United States and hammer the economy there?
Well, two separate issues there.
Yeah.
We're all watching the normalization of interest rate policy in the U.S. and watching it closely. I'd observe at the moment that the U.S. economy is doing quite well. And if you asked me, to wager a guess, I'd guess that that's going to continue for a period of time here. Now, what could upset that is a change in sentiment in some way, shape, or form. One thing that could change that sentiment is if suddenly the normalization or the change in monetary policy happens more quickly or in a surprisingly fast way compared to what the expectation is right now. Right now, there's an expectation for a certain number of hikes. We're predicting 4 as you go forward into next year. If that all progresses in the same way, I think markets will continue to react positively. If the sentiment changes, that obviously can affect markets. Looking at trade's another impact on sentiment. And so if we have a further escalation, that can affect sentiment, and that can obviously affect markets, and it can affect economic activity. So, sure, you have to watch those things. Those have an ability of slowing this all down. But at the moment, unless we really escalate into, something more severe or more significant, the U.S. economy is in pretty good shape.
Are you seeing any signs, though, that investment flows are slowing? Maybe money is going to go on the sidelines as they wait this out?
I'd say that's a little bit too dramatic. People are watching, and to the degree that it escalated more significantly from here, I think you might start to see that. But up till this point, and we'd all agree that the escalation, certainly from a rhetoric perspective, has increased the last few days. It's not enough time to see whether or not that's affecting investment flows. But if it continued, it could affect investment flows.
How about your plans for private bank and wealth management? I know Lloyd has talked about really building that out. As you're the heir apparent as well, how do you see the growth of the private bank, and in particular in Asia?
Well, we're very, very excited about the opportunity to continue to expand our wealth management business all over the world. And certainly we see with the continuing growth of wealth here in Asia an opportunity to continue to expand our wealth management business here in Asia. If you were asking about our consumer platform and our growth of our consumer business, for the moment, that's mostly a focus on building a U.S. platform, although we're starting to build out a deposit platform, in the U.K. and in Europe. But what technology is actually allowing us to do, it's allowing us to go build a platform and provide products to consumers in a different way that solve their problems or pain points in a different way than more traditional providers. And so these would not be businesses that we would have had access to without buying or really building an enormous infrastructure, traditional brokerage infrastructure, retail banking infrastructure. With technology today, you can provide a product or a service to a slice of the addressable market that's a better or differentiated product and service, and we're very focused on doing that. I think we can build a big business and connect it to multiple other products and services that we're well positioned to offer, in particular wealth management. So we're excited about the opportunity that the Marcus platform provides us. There are risks that come with building that platform, and we're obviously focused on that, but we're excited about the opportunities to serve a new group of clients with a differentiated product, and we think we're good at actually building out a platform like that, but that'll have to be proven over time.
Yeah, is Marcus something that could work here in Asia, and is something that you would plan for?
Look, I think that we need to prove it out in the U.S. We're a U.S. company. We've got, enormous access and footprint in the U.S. There are people that compete in those businesses over here that don't compete in the U.S. And so for the moment, we're going to be focused on building that business principally in the U.S., but we'll see over time. If we do something that really serves consumer needs and we build an extraordinary platform that adds value, there will be opportunities to expand that more broadly over time.
Now, Goldman has a stated goal of an additional $5 billion in revenue. Which main business line do you see giving that biggest boost?
So if you looked at the $5 billion of growth initiatives we outlined last fall, they touch a number of our businesses. They touch our fixed income business, our equity business, our investment banking business. It incorporates growth and investment in this consumer platform and also our wealth management business and our investment management business broadly. We set those growth initiatives out a year ago to start to talk about some of the places that we were investing and we were growing. But I'd just like to highlight that is by far not the limit of our ambitions.
Right.
So we are investing in a variety of places and driving growth through those. We track those, and those are moving forward appropriately. But we continue to look for other opportunities to expand the product set that we can offer our clients and to use technology and our footprint to expand the services that we provide.
How about here in Asia? We've talked a lot about the potential of getting the securities joint venture up into a wholly owned entity eventually. How do you see hiring patterns going? I believe with Gaohua, 167 employees. Goldman Sachs Gaohua has about 100. I might be wrong on the numbers, but roughly 300 in total. Do you see significant hiring in China?
I think that our business in China will continue to grow over the next decade, and as it grows, we'll be required to add talent resources, to the business. The hire that I mentioned today, which is obviously a very senior hire, is an indication of our continued commitment to growing and investing in the business here. As the business scales, we'll continue to add to it. One of the reasons we're excited about the opportunity in China is we do believe as markets open up and there's more liberalization of the capital markets here, that there will be a broader opportunity to serve clients here, and we want to be well positioned for that.
Are you satisfied with the pace of liberalization? They make a lot of pledges, but oftentimes it's the implementation that's the question. I mean, yes, MSCI has happened. It's a small quota. We are going to potentially get China depository receipts as well. They are trying to take these steps, but it's a slow process.
Look, there's no question that there's progress, but there's no question that it's a slow process. You know, I think as you think about investing in China and building your presence here, as we think about building our presence here in China, it's going to be very important for us that we stay committed and that we're patient.
Yeah.
And so, you know, would I like it to move faster? Of course I'd like it to move faster. But we're committed, and we're going to do what's necessary to move forward in the appropriate way.
Now, I'm not going to assume that you're going to give me a date on when Lloyd Blankfein retires, but how
if he gave me one, I could give you one.
You are the heir apparent. He's talked about it a lot. How are you already shaping the kind of Goldman Sachs you would like to lead?
Well, Lloyd's the CEO, and he's running the firm. The board is going through a succession process in that context. You know, I'm operating as the president and chief operating officer, and Lloyd and I work together to continue to shape the direction of the firm as the firm moves forward. So I'm in a position where I have a very, very strong voice with Lloyd in driving the organization forward. And so at the moment, I'm focused on making sure, you know, we do that in the best way possible for our shareholders and our other stakeholders and for our clients.
The DNA of Goldman doesn't change, but are maybe the strategies and the emphasis change a little bit as you're going into consumer banking? Bitcoin, we know that Lloyd is not a fan of Bitcoin, but you have started derivatives trading in Bitcoin, I believe, or cryptocurrencies. Do you see avenues that you would take the bank that perhaps Lloyd would not?
Look, I think one of the things that you have to recognize about any institution, and Goldman Sachs will celebrate its 150th anniversary next year, is organizations have to change, you know, to move forward. They have to evolve. But generally, you know, they evolve. It's evolution, not revolution. And so, you know, it's going to be important for Goldman Sachs to continue to evolve its business and adapt to the environment that we're in. And with a 10 or 15-year view, I think you'll continue to see Goldman Sachs evolve, broaden out its platform. I think one of the things that we have going for us at the moment is we operate globally at scale in a number of businesses, and that gives us some opportunity to add other businesses, you know, to that portfolio of services we provide to clients. We're very focused on doing that. We'll continue to focus on that. Are there businesses that we're not in now that we may get in? You know, we'll see. Yeah. You know, we're always looking at businesses and new opportunities. You know, you mentioned Bitcoin, cryptocurrency. Not just Lloyd. We're cautious about exploring, you know, those activities. Yes, we are clearing some futures around Bitcoin, talking about doing some other activities there, but exploring very cautiously. We think blockchain's extremely interesting. Right. But at the same point, we also are going to be very, very cautious. But we're listening to our clients and trying to help our clients as they're exploring those things too.